On this Friday, I took a trade on the NQ, and then in this video I'm going to show you an easy step-by-step process that I took that made me to buy the NQ on this day. With this trading model, no daily bias needed. The focus is simply on the current day. There is no need for you to go over last week for an old price action to project what's going to happen in the current day. The focus is simply on the current day where you are going to take a trade on.
Welcome to RFT Airlines. Welcome to RFT Airlines.
Now we are on the real price chart here for the NQ. But before we can get into this thing, we need to start from these few rules that you have right here, like the trading plan, the trading model. What exactly are we looking for in the market before we can attempt to take trades in the market? Biggest mistake most people make is that they approach the market without a solid trading model, without a solid game plan. You need to have proper game plan in the market, because if you don't have it, it will be easy for the market to play tricks on you and get you to take trades in the wrong place in the wrong time. So that's why here we have the solid trading model, solid rules that we follow before we can even attempt to approach the market, right? So what exactly are we looking for in this thing? Firstly, 9:15, that's for the direction of the market on the 15-minute time frame. H4, we are looking at two candlesticks to confirm the direction of the market. I'm going to show it to you in a minute. What exactly are we talking about? The midnight to 15, we are looking for the ADR. On this day, we started this day at 2.19%. So sometimes the ADR can be in the form of pips, depending on the platforms where you are checking or getting the ADR from. On this case, it is at 2.19%, and then I'm gonna show it to you how to apply the idea of the ADR and what it means in the market. And then 15:30 to 16:30, we are looking for entries in the market. Now here we are looking to take trades. How are we taking trades, and how and when do we take trades in the market? So I'm going to show you some few variations on how I was able to take some trades right here that I took right there. Now let's get into it. Now let's approach the market using all these rules that you have right here. Let's try and apply these rules into the market. So firstly, we set 9 and 15 right there. So let's mark 9 and 15. It's for the direction of the market. So how do we determine the direction of the market right here in this case? So we are looking for one of the two scenarios or variations that the market always play out right here. So if you don't know exactly what I'm talking about, you need to watch my previous video where I was talking about the characteristics of a continuation and the reversals, because that's what we want to find right here, either if the market gave us the continuation or the reversals. So right here, what we have, we've got the market that opened and peaked one direction right here. So this variation or these characteristics of the market that will open peak one direction to the upside, this is for the continuation. So that means we look to continue all the way to the upside to the same direction as the way the market opened and peak one direction. So we simply check number 2, H4, two candlestick, to confirm what we are looking at right here. So how do we confirm all of that? We need to get to the forward time frame right there. So now let's head over to the forward time frame so that you will see exactly what I'm talking about in there. Now this is the day that you're currently at on the forward time frame. So we said we are looking at two candlesticks on the forward time frame. So which are those candlesticks that you are looking for? We are looking for this one, the first one right here, first blue, and the second one that you are looking for is this one right here. So these are two candlesticks that we want to see, right? So since we found the continuation from the 15-minute time frame, that means on the forward time frame, those candlesticks, those two candlesticks, they have to agree on one thing. They have to show us continuation candlesticks. We don't want to see a candlestick right here that will be giving us like the bearish engulfing, long weak candlestick on the other side, like shooting star, reversal candlesticks from the upside to the downside. We don't need to see anything like that, because once we see that, that will mean there's an inconsistent between the 15-minute time frame as well as the forward time frame. So we want to see one and the same thing. One thing that we found in the 15-minute time frame should be the same as what we found on the forward time frame in there. So right here, what we have, we've got full blue candlestick to the upside, just short, and then in the second candlestick right here, this big blue candlestick showing all us full momentum to the upside. This means here we've got a continuation to the upside right here. So that means what we found on the 15-minute time frame, it is exactly the same thing that is on the forward time frame that we are seeing. So that means that continuation that we found is correct. Now to the next step, what we have, we've got midnight to 15 ADR. The ADR is 2.19. We started it at 2.19%. Now, so the ADR is not the same. ADR gives us from one day to another day. On this day, it was 2.19%. It won't always be 2.19%, so don't make that mistake of thinking that it will always be the same in there. So this was the ADR for this day. So now how do we calculate or check the ADR from there? Means we need to check from the lowest point all the way to the highest point right here. Lowest point all the way to the highest point. Highest point and lowest point, that's created between midnight from here all the way to the highest point that was created at 15 right there. Now that means we are from the lowest point. This was the lowest point, this was the highest point right here. So that means you're going to take this ruler right here to match. Now if this ruler match the percentage and then it ends up being around 2.19%, that will mean the market has reached an ADR. But if it will be below, far below 2.19%, that means it's safe. The market can still continue to the same direction from there. Means the market has not yet reached an ADR, right? So now let's match. We have the market opening going all the way to upside right here. Now the percentage right here is 1.14%. 1.14%. It means the market had only covered 1.14% out of 2.19%. It means the market can still move all the way to the upside. It's still possible to move all the way to the upside from the market or with the market in that case. Now if the market has reached an ADR, for example, let's say the market this 1.14% is 2.19 or 2.30, that will mean the market has reached an ADR. So therefore the market tend to lose momentum of continuing to the upside if it has reached an ADR. From there, two things will happen. The market will either consolidate or the market will simply reverse all the way back to the downside if the market has reached an ADR. So now in this case, as we are still left with more percentages to cover from here, it means this continuation is still valid. We can take it and continue to the upside from there. Now let's move on to the next step, which is between 1530 and 1630. Here we're only looking for the entries in the market. So 1530 is somewhere here. That is 1530 right here. Now there's a variation that the market likes to play out at 1530 right here. 1530, the market will spike either up or down, right? If the market spike to the upside, it gives you an opportunity to sell from the upside to drop. But if the market spiked and open, drop to the downside, it gives you an opportunity to buy all the way to the upside right there. But I know someone is saying like, I think I found a trick. No, this is not a trick, because you've got to move in the same direction as the market condition or as the direction that you found between 9 and 15 right here. For example, right here we've got what? We've got the direction that you found, that you want to continue to the same direction. This is a continuation, is a buy. That means you want to see the market open, pick the low and go all the way to the upside. So having the market condition or the direction of the market at hand will save you from taking wrong direction, because the market can still open, go up. So for someone who is not well informed, will think or will say, since the market has opened and picked the high, it means I want to sell. No, you don't do that, because the market condition or the direction of the market says we want to buy. The only thing that you can do right here, it is only to wait for it right after it has dropped to the downside, and then from there you can start to buy this instrument all the way to the upside. That's how you approach this thing. So the entry that you are looking for at 1530 or between 1530 and 1630 depends on the opening of the market, how the market opened at 1530. So now sometimes the market can fail to reach an entry point. So that will mean following candlesticks you can still continue and finish all the job that was started by the New York Open at 15:30 from there. So right here, what you expect to see was to see the market open, drop, and rises all the way to the upside. So that's why our entry was somewhere there, and then right after that, the stop loss was few pips below there, and then the market was all the way to the upside. This is where we expected to take our trades from. And then right after that, at 6, you shouldn't be in the market. Even if like the market can still give you another opportunities, you don't want to take trades right after 16:30 from there. So that's why our trade was taken right here all the way to the upside. In that case, easy as that. You don't need to complicate this thing. You just keep it simple and straightforward, because simplicity is the key. Simplicity is the key. So don't forget to like, subscribe, share, and also leave a comment in the comment section. It could be a question, it could be a concern, it could be a request, anything that you wish to leave on the comment section, just leave it